Good afternoon, traders. This is your end of day as well as end of week video, even though it's a shortened holiday week. This this week we will cover some of the performance for the week. So a couple of themes we will go through in this video really quickly too, in terms of what some of the takeaways, and I think what are some of the most important charts and some things to watch as well for next week. Before we do any of that, risk disclaimer in front of you: everything that we're going through is for information purposes, not giving out any advice or recommendations. So just quick theme of the day, and it's the first chart that I'm going to go over today, which is the dollar reversed. The dollar was down about almost 1/3% this morning, and it finished basically back at flat for the day. So started to think like, hey, maybe you're going to see this dollar kind of begin to kind of lighten up a little bit. But this is important because we have over the last couple of weeks, 1, 2, 3, 4, right, and that's led to a little bit of market weakness because it is indicating overall risk off. And a break out of this range, and we're getting closer and closer to the highs of last year and to the top of value. And remember, if you take a look at how this materialized last year, right when this kind of peaked out was where equities bottomed and started to march higher towards the end of the year. So we're not there yet, and in terms of seeing this kind of turn around, and I think overall this is telling you just risk off, and how much of a more how much of a more difficult environment this is. We've talked a lot about things about breadth, which has not been good. So all of these factors that we tend to go through, like what market breadth is telling you, when we have poor market breadth, there's more names that are going down versus going up. When you have a stronger dollar, you have an equity headwind. When you have rates going higher, that's an equity headwind. So all of these things are kind of, for now, painting the same picture, and that means to try to be a bit more defensive in this market. Here's what TLT looks like on the weekly chart, right? Probably the second most important chart, but I think it does go hand in hand with what the dollar is doing. But 93.42, we're sitting there right at the bottom of value, and overall not looking great. The 30-year bond futures as well, right? We're also sitting right at the bottom of value for the year. Also, if we look at the daily chart here in bonds, price is trying to hold the bottom of value. I mean, this was also kind of this very similar to the dollar earlier, was that bonds were rallying a little bit, but they gave back all of that. And again, so you look at today's price action in we could start just looking at the 5-minute chart in the S&P, and you can kind of see this was the high of the day, right when the dollar was going down, and right when rates were moving down. But as they started to reverse, same thing with equities today. So again, you kind of feel like I think we're officially out of the summer, but this has felt like just another summer Friday in terms of price action starting to go up in the beginning, first half hour of the day, and then basically dropping and not having any conviction behind that first 30-minute move. So again, not an easy market to deal with. When we back this out and when we look at the daily chart, right, we know that we've been in a position basically of weakness right now. How do I define position of weakness? Well, you have price below all these short-term moving averages. We dropped back below the 50-day moving average. We're back below the 20 and the 5. So again, this is just very easy to kind of define. When price is above the short-term moving averages, you got a nice trend, and the market is in a stronger position. Right now, this is in a weaker position. I would take a look at this bottom of value area. That could be where we're headed. Specifically when you look at SPY, I know some people have made reference to this, who are also using the MarketWebs, that we have the bearish 80% rule in SPY. We started the month trying to break higher. That got rejected. And we're sitting here, and the bearish 80% rule means that there's an 80% chance that we could go all the way to the bottom or to the top when provided that we started the period either above or below. It just means 80% that chance that you could see a move all the way through basically, close to one standard deviation of price action from the previous period. This also looks very similar for the Qs, right? Even though that they've been showing a little bit of strength, the 80% rule is still there. Notice, and again, this if price action can negate the 80% rule by getting out of the back outside of the value area. And notice we tried to do that today, but got rejected. That's at 375.29. A couple traders brought that to my attention that would be a good short opportunity. If you're looking to short, you could short right into that level, 375.29. And if we break above there, you could of course take that position off, take that short off. But that's the situation that we're in right now. And again, it's September. We're almost going to be, we're getting closer to the two Jewish holidays too. The old saying, if you've been on Wall Street for a while, one of the sayings that I used to always hear around the trading desk was sell Rosh Hashanah and buy Yom Kippur, like a very seasonal September trade. So the 15th of the month is Rosh Hashanah, and then Yom Kippur is at the end of the month. So we'll see if that plays out. But again, all of these things are kind of lining up the same way. It's basically telling you right now to be a little bit more defensive in terms of overall risk taking. All right. And, I think you're also seeing that, in terms of setups. I went through a lot of chart setups in yesterday's videos and a lot of those names, they ended up starting the day higher and either finishing, basically giving back some of those gains or giving back a lot of those gains. So that's the situation. Here's a quick sector rundown. Of course, energy it did very well over the last 5. By the way, it says this week's sector performers, but it's really over the last 5 days. It's just an easier way for Bloomberg to capture the data. But energy, you look at the big 3 energy ETFs, and they were all up over 3% over the last 5 days. And then you really have a drop off after that, right? That was definitely the best sector. And then besides that, which is fine, I've been positioned longer within that group. We'll talk a little bit about the refining stocks in just a minute. Those have been, I think, one of the best areas of energy over the last week. But outside of that, you really saw a drop off. Internet stocks, they did okay for the week. Despite a lot of headlines going on this week. The internet ETF FDN was up just a little bit over 0.5%. Then it was utilities, and then that's it. Everything else is basically negative. And if you flip to the right side here and look at the underperformers, so even though First Solar got an upgrade today, I don't think that stock did much today. I think the high of the day was the pre-market. But down 4.6%. Chinese internet names gave back a lot of gains. They had more economics, and I didn't hear much about further stimulus. And it's kind of interesting what's going on there. When they mention stimulus, their equity market seems to rally for a couple days, and then once you don't hear about any more stimulus, and it retreats, and pretty harshly too. Robotic stocks, AI stocks were down 4% for the week. Semiconductors were down pretty decently too, down 3.7%. A lot of, we could begin to kind of go over a couple of charts. Intel got a lot of attention, but Intel ran into a virgin point of control. You've got overhead supply here. So we'll see, whenever price gets to one of these red lines, virgin point of controls, it becomes a battle with new buyers and overhead supply. So you really need a lot of buying pressure to get through those levels. In my opinion, you might see Intel stall here, but that's just my opinion. I mentioned I would talk about the refining stocks. This was one of the stocks that I tweeted out over the weekend, right? On the first move up. This was on Friday. It made a nice move out of here. Nice follow through. That's the trade that I played this week. I also tweeted out this morning about Valero. Valero had a real nice day today, up 4%. I caught a little bit of this move today too. A couple of the other, just to go through a few of the other so this is kind of interesting when you go one by one through these refining stocks. many of them look quite similar. So again, it just kind of tells you right now there's some real strength within this group. Another one to look at is MPC. If that one looks very similar to the PSX. So it's nice to be able to catch these things. This is what I try to do, is basically find in a in an area in a market that's been really weak, try to find where there's relative strength and where there's performance. So that was basically where that was for this week. Other areas I just wanted to go through and just mention the international areas, but again, not some good breath, and basically that's the summary of this end of week video, is just to kind of hang in there and be defensive, not get frustrated. That's the last thing I think that you really want to do this month, because it is a difficult month, is to not get overexposed, right? No reason to kind of, give away money in such choppy price action, and be ready and fresh when the market actually turns and has a little bit more wind at its back. As a reminder too, for next week, we're going to have some data that comes out. Notice that so CPI, PPI, those are some of the two bigger data points that people will be looking at. Notice what's going on here for the month. The expectations are much higher than what we've seen in the last few months. They're looking for a 0.6. So that is the expectations. It's probably partially because, energy has gone up so much over the last month. So you will see, it looks like you will see a higher number for next week, but they're already expected 0.6. In fact, when you strip out X food and energy, you're gonna see that number that they're expecting a 0.2. So really, I think it's the energy that is causing the a jump from previous months, but that could be why you're also seeing the price action as it is. And then we will also get PPI later in the week. So that's it. I'm going to cut this this end of week video short. Have a great weekend, everybody, and see you next week, and be ready to go.